Hello, everybody, and welcome back to the Dash Trader Newsroom. The big question on everybody's mind, traders and investors alike, is will there be a rate cut in September? A new hope arises. I don't just say that facetiously, because we've been talking about hope for a while. My name is Michael DeJoe. I'm Director of Educational Services here at Dash Trader, and I'm joined by my co-host, Jill Molandrino, Global Markets Reporter from NASDAQ. Hey, Jill.
Yep, got it. Good to see you.
We're in full graduation mode, you and I, so we're getting ready to head out and do our family things. But before we do so, we saw this week the ADP private employment number comes in a bit soft. Any indication that the U.S. economy might be slowing? What are your thoughts on the ADP number? Does it really bring a new hope, or is it, again, we're just grasping for straws here?
It's such a challenge when it comes to ADP and then other jobs readings that come in. I mean, you know how it is on Jobs Friday when we get the key non-farm payroll report data, and there's always such a divergence with the methodologies there. I think the market gives more credence to what comes out of the Labor Bureau's NFP data. So it might potentially signal a trend, but I don't think the market necessarily moves off of it as much as it would, the NFP numbers.
Sure.
And while I respect the work and that goes into the methodology, I just feel like, traders kind of glance over it at this point just because there are such stark divergences there. So again, I don't know if I take the data as a grain of salt, but I would look at it more as a trend, if anything else.
Mm-hmm.
So, I mean,
as far as the ADP number, it does not include government jobs, right? This is just private employment roles. And, it really showed a significant slowdown. I think it was around 35,000, 36,000 less than the expectation. But something that was more significant was that the ECB cut rates. Obviously, the United States is not Europe. Our economy has been way hotter than the European Union's. What are your thoughts on the ECB cutting rates in Europe?
Mike, you actually hit the nail on the head that our economies are certainly different. We are running hotter in a number of areas than the ECB, than the EU at this point. I just feel like, and we've been talking about this throughout the year, and it's almost refreshing in a way that the market hasn't been so fixated on what is happening with rates. And the US has taken, it almost seems as if a more fundamental tack, in terms of how companies are navigating a higher interest rate environment that looks as if it's going to be higher for longer. And I really think that's the narrative that U.S. investors are taking. Although you're right, it does. It is significant. It's the first time that the ECB has cut interest rates since 2019, and that's before the pandemic. I mean, I'm not really quite sure what other what else they could have done during the pandemic, in regards to rates. So it just kind of seems to be taking it in stride, honestly.
I mean, obviously, rate cuts is, very, very heavily tied to inflation, and the inflation situation in Europe is significantly different than the inflation situation in the United States. Even in Europe itself, you have divergent situations in as far as inflation goes, some places being higher, some places being lower. So, I mean, I don't know how much of an indication it is. I just think that it seems like, we've been talking about this over the course of really a year about this kind of, the market is, expecting another, we're going to drop interest rates. We're going to have a soft landing. It certainly seems like if we have landed, then it has certainly been soft. The question is whether or not we have landed yet. What are your thoughts on that? Have we landed yet? Has the economy found its footing, or is it just holding off to the election?
Probably more of a wait and see mode, to your point. We had a couple of strategists on the show this week, and that was basically what we had walked away with, where it's going to be more of a wait and see. We didn't get that sell off, the sell in May and go away. June is kind of hanging in there pretty steady. So it seems as if volatility is somewhat within the range, and typically around this time of year tends to be compressed anyway. So, they're thinking that it's going to be more of, summer doldrums and kind of keeping an eye on the book, but not really expecting things to heat up until it gets closer. I mean, especially for the month of June, there really is not that much going on. We don't get into earnings until like the second week in July. There's, not that much on there in terms of economic data. I think everyone's kind of priced in what's happening with the Fed. And it just kind of, as it stands right now, their expectations is it's going to be somewhat of a sideways, perhaps more, quiet summer, with the exception of, here or there with specific companies when, earnings comes out in
I
July
mean,
and
great
August.
point. We're kind of entering the summer doldrums, right? I mean,
We hope.
this really is the summer doldrums, right? You get to June until the middle of July, and then you get earnings season again, and then things start to pop a little bit. Now we already heard and we already talked about the European regulators. They seem to have got the jump on the United States, but the U.S. regulators, in a slightly different way, they're not talking about regulating AI. They're talking about opening an antitrust case on OpenAI, Microsoft, and NVIDIA. Now it's just an inquiry at this point, but what do you think the impact of that will be on AI in general? I mean, AI has been driving this market. What are your thoughts about this U.S. antitrust inquiry on these various strongholds of the AI space?
Yeah, it's I think this is going to be interesting to follow. When we think about these particular companies here as it relates to Microsoft, what's happening with OpenAI, NVIDIA is a little bit different because that's more of, the brains that go into this type of technology. I think there is somewhat of a concern there, as how powerful can these companies get? It's almost like when we think about Web 2 and the influence that, let's say, Meta, Google, Apple, has over the intermediaries that kind of make the internet work, right? And how we transact across every, vertical. And I also think with what's happening with AI from a more existential perspective, the data going in, the data coming out, the responsible and ethical use of, the different types of use cases. And we can even talk about, with the AI bubble beginning to burst. It feels as if every industry has rushed to get some sort of AI, and it's not like AI is new, but to be able to tell their AI story, to try and figure out how this fits within product and revenue streams and how it's impacting workflows. I mean, Mike, even just take, for example, Google AI search and so forth. If you're an SEO strategist, which is significant in the social media and internet world, this has kind of blown up the model overnight, right?
Yeah,
So
I mean, I was going to bring that up next. I mean, I'm glad you
right.
jumped into it, because basically Google is using its AI to direct you before you even do a search.
Right. So there's a couple of things here. And SEO it's difficult for me to understand. That is not my lane whatsoever. We kind of, people who help manage trade talks on the back end deal with all that. But it almost feels like with SEO that it's almost, a kiss the ring kind of thing. Like, you could have fantastic content, but if you're not paying the right resources, if you're not, posting here or there, it doesn't even matter. It just kind of goes into this vacuum, right? So it's a cottage industry that you love to hate, but regardless of that, how AI is just blowing up models, I just don't feel like as if everyone, not even just regulators and the framework part of it, but people who are exposed to this every day have had time to wrap their heads around it or figure out what models look like or what strategies look like. And it's very opaque in that perspective. And that's just, the bottom, like the lower tiers of what AI is capable of doing.
Yeah,
So
I think a bigger story certainly was what Google did in terms of using AI to direct traffic. I mean, that was a massive impact to anybody who's doing digital marketing. I mean,
right, but Mike, see, my whole thing is, and again, I don't know this space. I can be completely off base, so this is just very rudimentary. If there are strategies that, like I said, there's a cottage industry built up around SEO. If that model is blown up and you're thinking to yourself as a marketer, well, what do I do to get better AI results? Isn't that technically manipulation of the data, right?
Yeah.
And that's what I don't understand. And there's probably people
I
out there,
mean,
I'm
I think
sure,
that, potentially the US regulators should be opening up an antitrust inquiry on Google, because it really, it kind of, it uses all, so basically the way, I mean, I'll just do a 2-second, bit on
Mhm.
this. So let's just say you use your Google sign in to sign into, I don't know, Zoom, right? Google gets your Zoom data, right? By using your Google sign in as the way you enter these various websites, they use that data to kind of direct advertising directly to you. And when you bring up your web browser, your Chrome web browser, you're going to see things that you had talked about in all of these other things that you signed into with Google. So again, it's not cutting off, because if you do a search, you're still going to use the search algorithm. But again, Google's trying to bring, it's almost like, when you have the Google ads, when you do a search on Chrome, you see all the people who pay Google go up to the top, and you have to scroll down a bit to find the actual web browser results. This is just like putting in your face whatever their AI thinks is going to be most interesting to you in your face.
Mhm.
And it does make it way easier, way more difficult for the cottage industry of search engine optimization to get your attention. It really puts that very much in the hands of Google's black box AI. And then next, so first you're going to be solicited by Google's AI, then you're going to be solicited by anybody who paid for Google AdWords, probably already solicited by them by AI, and then you're going to have to scroll down to find your actual search results. You can either do that, or you can do like I did and just go to a different browser like DuckDuckGo or something else that's a browser that is not Google dominated. Very similar to what happened with people not opting out of Microsoft for a period of time because they didn't like Microsoft products. But very, very good point on that. Next, okay, you and I both have a big interest in crypto, and I think you were just at a crypto conference.
Mhm.
So what are your thoughts? I mean, I know you and I a number of years ago were talking about, will Bitcoin see 10,000 or 100,000 first? And obviously, a lot of people are talking about, is Bitcoin headed for 100,000 by 2025? What are your thoughts on that?
It's interesting. We just came back from Consensus in Austin, Texas, last week. We just got back this week, and we've been covering it's the world's largest digital asset Web3 crypto community conference, and we've been covering this since 2018, which was really the infancy / toddler days of more
Yeah.
mainstream media covering digital assets. So we've been in the space for a while, and we've been witness to the ups and downs, not only in terms of crypto trading, but regulatory, market structure, capital markets, peaks and valleys, over the past 12, 13 years that digital assets have been, or crypto has been an asset class. So what I thought was incredibly impressive this year is no one's talking about the price of Bitcoin or where coins are going in general. The focus has really been on what's happening with regulatory framework. And, the timing was fortuitous. We just got the ETF application approval the week before. You just got FIT 21, which is, passed by the House, which was a really comprehensive digital asset framework piece of legislation that, we're waiting on, for other votes to come through and then get it to Biden's desk. So the fact that we are seeing framework evolve out of the US, which to me is an even bigger catalyst than spot Bitcoin, Ethereum ETFs, because you really, we're seeing a lot of people move operations to EU, UK, South East Asia, where frameworks have been established. So this conference was really around increased institutional adoption, capital markets, the integration of DeFi and centralized finance, regulation, and moving beyond just the crypto decentralized architecture evangelism, where it wasn't just about us versus them, but it's about improving user experience, bringing it to mass institutional adoption, mass retail adoption. And it was just such a different conversation, more articulate and more thoughtful. And you're starting to see an actual framework play out. And that is where I think the digital asset space is more so thinking versus just where, exclusive to where Bitcoin's going to go.
That's great. I mean, that shows that the market is becoming more mature
Absolutely, Mike. And the whole thing is that does lend to appreciation in digital asset prices. I will tell you something else.
That will lead to 20 that will lead by 100,000 beyond 2025 because it's going through the process, not talking about the price.
Right. So, Mike, but here's something else that I think you're going to find interesting as well, particularly as an options trader. So there are CoinDesk as an example. They have constructed digital asset indices so now that there are benchmarks for managers of digital assets to be able to bench to. That's one use of them. It also allows other products to be developed because there is an actual index in place. CoinDesk has partnered with New York Stock Exchange, and yes, it's a competitor of ours, but we're talking about news within the digital asset space, where they're going to offer options on CoinDesk's indexes. And why this is exciting for the space is, Mike, as you know, this offers an actual risk management tool for people that are managing digital assets. It's
not something that's unregulated like a Deribit or something like that. This is actually a regulated exchange now offering options and etc. That's
right. So it's the framework around the asset class, which, regardless of what exchange is listing it, I think is super exciting.
That's awesome. And of course, there was just the announcement that there is a new stock exchange, another competitor to NASDAQ out there. What is it? The Texas Stock Exchange. Formerly it was the National Stock Exchange, but that was another interesting news while you were out in Texas.
Yeah. Well, I think, Mike, even besides that, but I'm sorry, real quick. We've seen kind of the exodus from Chicago, New York, where traditional exchanges have been, going to places like Miami, going to places like Texas. I think, we need to kind of rethink our business-friendly policies up here in the Northeast. Different conversation, but
absolutely. But that's a great point. It's certainly, you see a migration out of those market centers like Wall Street. The last bit of news that we were going to talk about today was RobinHood makes a bid to buy BitStamp for $200 million. This would make RobinHood the largest cryptocurrency broker in the U.S., potentially surpassing Coinbase. Any thoughts on this? I mean, I think it just goes along with what you just said, that there's maturity in the space.
Well, it is interesting. BitStamp is coming on our show at 2:15. They'll be on with us today. We're going to have, This has been booked for a while because, as we've been discussing, I cover regulatory framework in the digital asset space quite extensively. So we're having their chief U.S. legal officer join the show, and again, the conversation is going to be around balancing regulation and supporting innovation to ensure that the U.S. remains competitive in the global crypto market. So this is where we're going in terms of our coverage, but just make sure that you guys check back in and
I absolutely will. That's fantastic. That's excellent. Well, that's great news, and I'm going to be looking forward to seeing that. And have a wonderful weekend, Joe.
All right, you too. Thanks so much.
All right, take it easy. See you next time. All right, let's take a look at some of these charts. So I have my DAS trader all set up. First thing, well, the first one we're going to be talking about today, I just figured that we take a look at Google. So here we have Google really approaching an all-time high. The SPY also just made a new all-time high. NASDAQ also made a new all-time high. So markets are still trading here at the highs. DIA, not near the high, right? It did come off its peekaboo new high at, it made a little peekaboo above 40,000. This is the DIA. So these are the ETFs associated, with the Dow Jones. We have Apple. Apple has made a significant comeback. I mean, all the way back up, making a new all-time high up here on Apple as well. So Apple certainly made a comeback. This is Microsoft. So now we're talking about the Magnificent Seven, not the top five of the market. The Magnificent Seven is MSFT. So this is Microsoft. Let's see, MSFT. We have Microsoft. So Microsoft putting in a lower high, on really not affected at all by that inquiry. Let's see, Apple. right? Apple is as part of the Magnificent Seven, AMZN. Yes, Amazon. Amazon not near a new high, but it did put in a double top previously, so but it's hanging out there. That's Amazon. NVDA, which has just been on fire, but today we have a little bit of a blow off top. NVIDIA on their earnings announcement announced a stock split. So you'll see sometimes that, sometimes see that NVIDIA will, will give a little bit back, but it will make a run into the actual split. It is a 10-for-1 stock split. So, at this point, it's about $122 a share, $119 a share after that 10-to-1 stock split. So a lot of times you'll see investors rushing in to buy the stock when it's still in the thousands, so that they get 10 shares. So you buy 10 shares at 1,000, and then you get 100 shares when you're done, after the stock split. So we already talked about Google. That was the first stock that we looked at. Let's see, Microsoft, Google. Here is Meta. Meta, not really the same picture as the other stocks. I mean, they kind of got beaten up a little bit after earnings, but they have completely faded back in the direction from which they gapped down on the earnings report. But needless to say, people looked at that gap down. There was this big gap disease when they had a great blowout earnings the quarter before. And now on this earnings report, they gapped down, faded, and filled the gap. And now we've kind of come to fruition. But if you could see all those green bars indicate that people are looking at Meta at a discount after the gap down on earnings. So, I mean, just imagine you bought this at 420 and now you're already laughing all the way to the bank at 500. So you made an $80 run after that bad earnings report. So certainly traders and investors alike were looking at this as a discount to a great company like Meta. I think that's the vast majority of them. GLD, gold breaking out of its consolidation to the upside. Certainly gold has done, exceedingly well. Gold is trading at all-time highs. And of course, GBTC, the Bitcoin ETF that has been doing exceedingly well. If you would have bought this about 4 months ago, you would have got it at around 38. Now it's trading at 63. That's an incredible percentage move. So those are the main charts that we like to talk about. The last thing is we're starting to see USO. We're starting to see oil make a run back to the upside. This is USO trading up from 71. Last 3 days, we've been on an upward swing. OPEC is announcing that it's probably going to be increasing oil prices going into the U.S. election. So certainly also on the oil is going up on the potentiality that there is that new hope for a interest rate cut in September. As a result, you'll see oil start to go up in price, interest rate cut, probably a weakening of the U.S. dollar. The U.S. dollar has been very strong, and that plays out to a stronger position or a stronger price or higher price in oil. So very, very interesting charts for us to take a look at as we go into the summer doldrums. Let's wrap things up. Stay up to date with all things DAS by signing up to our monthly newsletter and email. Simply fill out the form at the bottom of the DAStrader.com website. Subscribe to our YouTube channel at Dash Trader TV for the Dash newsroom reminders. Follow us on all things social media, LinkedIn, Twitter, Facebook, Instagram at Dash Trader. Thank you very much for joining me. A lot of interesting news and updates. See you in a couple of weeks in the Dash Trader newsroom.